With homebuyers facing a possible interest rate rise before the election, it now looks like rates could keep rising into 2012. That's according to the latest business outlook from Access Economics. It's bad news for states like New South Wales, which is among the nation's worst economic performers. Here's Phil Lasker.
Global interest rate pressure won't be coming from here. A US economy still struggling. In Washington, thousands of desperate homeowners turned up to a mass meeting with their bankers. They were pleading for more time to pay their debts.
There's millions of homeowners out there who are determined to keep their homes, who will do anything to keep their homes. And everyone has tried to work with their lender and failed.
And there could be 1 million foreclosures this year.
We've been dealing with this issue with our mortgage company for over a year now, so by this time we've
ready to throw in the towel.
Yeah, we really don't. We're ready to get rid of it anyway.
It's not expected to count for much when the Reserve Bank meets to consider an election interest rate hike next week because its focus is elsewhere.
Continued growth out of Asia, continued demand for our commodities. We're going to continue to see the strong investment coming through in the mining sector in particular and also in infrastructure that will warrant higher interest rates. So we've got another 100 to 150 points of rate hikes over the next 12 to 18 months.
The Reserve Bank decision will be made a little easier by the outcome of the European bank stress test, which showed most of the banks could weather a deeper debt crisis. It calmed the markets.
It means the Reserve Bank can focus on what they need to do, and that's look at the Australian economy, our economic circumstances and what they need to do for the Australian economy. So I think in that respect, the stress tests have really removed that international flashpoint for the Reserve Bank ahead.
The domestic flashpoint arrives on Wednesday with the June quarter Consumer Price Index, which some say will show underlying inflation outside the RBA's 2 to 3% comfort zone.
Even if the inflation reading was a little bit on the high side, looking forward, it's more likely that inflation is going to be trending down rather than up, basically because consumers aren't spending and retailers are cutting prices. We think it would be very much a retrograde step for the Reserve Bank to be lifting rates.
No matter what happens next week, Access Economics' latest business outlook says rates will continue rising for the next 18 months. That's a problem for the biggest states. Queensland and New South Wales are equal last in CommSec's latest state ranking survey. They're suffering from slower population growth, the slump in financial services and tourism. The pack from 3rd to 6th place is being driven by a mix of strong investment, solid population growth and housing demand. While Western Australia and the ACT are the strongest performers thanks to the resources boom in the West and housing in the ACT.
Well, certainly interest rate hikes would be a major problem for a number of states, those which are driven very much by the housing sector.
The RBA always says rate decisions aren't driven by any one sector or any one state. It's the sum of the parts that matters.